Okay, let's do a recap, guys. Want to make sure that we got a new microphone. Want to make sure that Gerald can hear me okay. So the let's do a recap. So if you haven't played this morning's video, I set this trade up an hour and 15 minutes ago. So we talked about this at 8:30 this morning. All right, we went over yesterday how the market had tons of liquidity grabs all the way up. Liquidity grab. Now these zones tell us where the wrongly positioned traders are getting caught, and the smart money's pulling the market back into these zones, grabbing liquidity and trying to push the market in that direction of the liquidity grab. So we know the zones based upon our proprietary zones that we have. We have the liquidity grab zones already plotting for you with the software. So what the software does, it plots where the market should turn. Any given market, we show the S&P. We have traders that trade all kinds of different markets with it, all futures, even stocks, even crypto, currency, and so on. So it doesn't matter what market you look at. The liquidity grab is pretty much the same technique. You want to see the market pull back inside of our liquidity grab zones, and then see the market respond, bouncing outside the liquidity grab zones again. And that's what we've seen the last 2 days. It's been a buyer's market. If you look at it, the liquidity grab zone here bounced it. Liquidity grab zone bounced the S&P. Liquidity grab zone tested 3 times, bounced the S&P. Liquidity grab zone here bounced the S&P right into our zone again, right into it, reversed it. As long as the market does not break the low of our zone, as long as it doesn't break the low of it, the line in the sand, that's a line in the sand for the market. As long as it can reverse inside the zone, you have a directional push in that direction. So if you play the first video we just did this morning, you can clearly see they've been marking the market up. You should have no sells in your trade blotter if you're trading this system the right way, because we are buying pullbacks into the liquidity grab zones. Now, if you play the first video this morning, I said there's a transition happening in the market. How did I project that an hour and 15 minutes ago? And why did I think that? Well, if you look on the way up on the liquidity grab zones from yesterday, we never broke the low, never broke the low of the zones at all, never broke the low of the zone, never broke the low of the zone, never broke the low, never broke the zone. So what happened was, coming into today's session, here was a liquidity grab, a zone to buy the pullback. Right there, there's our 2 slash green slash. And on the video, I said it just violated it. So if you look on the live video we did this morning, I said there's our violation of the line in the sand, or the low of the liquidity grab zone. The market should have responded. It tried to respond at during the London session right there, London session. It gave a little pop, and it came back down, and it broke through the line in the sand. So that educates us that the market's trying to do what? Is trying to flip sides and now go to the sell liquidity side of the market. So what I did on the first video before the market even came up to this zone, I said, look for this sell zone now to come up into our sell zone. I marked it up. I said, look for the market to come up inside the sell zone, and then look for a reversal. Now, if you look at that on the bigger picture, it looks just like this. And so the market was trading at around, where was it? Right here at this level, down at this level, around 70.18 to 70.20 when we did the first video. And I said it needs to come up into this, the market needs to grab liquidity, because what happened was you get all these players in the market shorting the market hard down here, shorting the market, shorting the market, shorting the market. And then what happens is they'll snap the market back, catch the wrongly positioned traders that went short, and they start covering their position. Well, then you got all these longs that jump in. Longs are jumping in, saying there's a reversal. They trap those traders. They grab the liquidity, and this is where they're grabbing liquidity to bring it lower. It went right to my zone. This is my projected zone, and we're looking for a continuation short. So they trapped the traders to the downside. They trapped the traders to the upside. They went right to my liquidity grab zone, just like they did yesterday, the last 2 days. Went into my liquidity grab zone, popped it, popped it, popped it, popped it, popped it. And now this is a projected short. that we did in the first video. So play the first video that we did today, and you'll see that this was a zone projection before it even came up, an hour and 15 minutes before it even got to zone. It finally got up to zone around 9:45. We talked about this zone being the short at 8:30, potential short, and sure enough, it got inside the zone and it reversed. Nice trade, 70.22 down to a potential of 12. So 10 S&P points within a matter of, what would it run to? About 9:48. And now it's went down to around 10:23. So now what do you look at? You look at the next zone. I mean, if you got a runner still running, where's your overall target? Your target's down here. I went over this. I'm not going to go over this in this video, but you can see where the targets are in the market for today with the Fed coming out at 2:15. These are our targets. These are the next fair value levels where the market's trying to get to the next fair value. As long as I stay below, oops, put that up. Sorry about that. It's right there. So as long as I stay below, this is yesterday's. You want to look at the previous days, low value and high value areas. These are our targets on the S&P, target for the Fed today. So if you look at, let me get this back up. There we go. So there's our overall downside targets. The only way we're going to switch gears to the upside is if price gets above high value area. So that's 70.40. So as long as we stay below 740, more importantly, below the control point right now, 70.30 is the battleground for the market today because that's the most volume that's traded. That's the battleground in the market, is the control point. Once it broke this morning at 7 o'clock, what's the market like to do? This is a beautiful trade setup if you understand how to trade market profile. Market profile, you come down and you test low value, then you break low value here. The first retest, which they like to do, they like to bring it up to low value. You're looking for a sell signal right there on the retest for short. The next retest you're going to get a deeper retracement. What they'll do is they'll bring it up into the control point. That's where the most participants are. They stopped it right to the tick, almost right today at our control point, and you get another nice trade. Now, consequently, that was my trade setup I projected. So the trade setup I projected inside of the sell zone was the control point. So now you got confluence. You're not only in at the control point on a retest after it broke. That's the most participants in the market. It's not my opinion, not your opinion. This is the battleground for a retest short. That was your sell zone right there to bring the market lower. So not only did the software project the sell liquidity grab zone an hour and 15 minutes before it happened, it also projected where all the participants had their order flow, that's a beautiful trade. You want to trade off the control point. You want to trade off the HVA retest. You want to trade off of the LVA retest because that's all the market participations. That's all the market participants, right? So really a nice, these tools are really nice to use together. They work really good because market profile can tell us where they're trying to find and set fair value during the day and where their reversals are possibly happening. And that's not anybody's opinion. That's strictly order flow. This is all the volume in the market, all the hedge funds, all the prop firms, all the algorithms, all the professional amateur traders. These three big thick lines are the order flow of the market. All right. So, and that's the retest right there, 70.30 and a half. Look where it stopped, right in the liquidity grab zone, 70.30 and a half. Right. So that's how you want to do it. Now it just stopped on low value area, right? So if you look at it, low value area, it broke it again, broke through low value area. And what did it do? Retested it. So where's the market reversing? It just reversed right at low value area right here, right at it. These are key levels. Look how it stopped. This is not just by chance, guys. This has been working since 1985 for price profile and 1994 by volume profile. Stopped right on it. Those are your big inflection points to trade. The first retest, another big inflection point to trade. And if you can get these inside of the liquidity grab zone at the same time, you have major confluence. Well, what's this? That's right, the liquidity grab zone. That's your confluence. We always want to trade off the control point, HV and LVA, especially if you break the control point. What's it like to do? Retest the control point. You break HVA, LVA, what's it like to do? Retest the LVA, right? Because the market's always trying to find fair value. So that's what we want to do. I just want to do a recap showing you how you can project this stuff ahead of time. This software does not repaint. It's a sophisticated piece of software. It's not for everybody. This is not for all traders. If you're a new trader and just trying to learn about the market, this software is a little bit more sophisticated for you. You know, this is for more of advanced traders that want to understand market order flow. Because what this is strictly order flow. We're strictly looking at order flow. We're strictly looking at where the market participants are in the market, and we're trying to buy and sell at these high volume areas, at these liquidity grab zone pullbacks. So this is what separates amateurs from the traders that understand about order flow, because this is where they like to pull the market back into. You know, there's tons of indicators that are free for NinjaTrader. Tons of indicators are free on TradingView and Strategy Runner and all these, but they don't show you order flow. You have to understand where the market participation is. If you understand that, to me, nothing beats market profile. Nothing. There's not one indicator that I know of that can trump market profile. So because it's all the participation, all the participants in the market. It tells you where high probability reversals will happen or could happen. You know, sometimes they don't, they can blow through, but that's why you have filters. You have filters to pull yourself in. When it tested the control point, that's exactly where we projected the liquidity grab zone to happen. You should see reversal. And did it? Yep. Sure did. Now, the thing we do is we add the 5-minute opening range to it after the first 5 minutes, just to see the energy of the market, right? We don't need to wait 30 minutes or 15 minutes or an hour. You know, I know a lot of that, you know, fair value gap traders, they wait and they wait and they wait to coincide with, you know, a longer opening range. Well, I like the first 5-minute opening range. The first 5-minute opening range tells me the energy of the market. The energy's down. We're below the opening range. We broke the opening range. We broke through the opening range again right here. So the market's still weak. It's in a weak stance in the market. If we can get through this PP and starts getting in this opening gap, we should have a nice sell signal inside another liquidity grab zone. Right now, liquidity grab zone sitting right here. That's what we're sitting at. And that's the zone we're going to look for another reversal. Now, as the market prints lower and we start accelerating to the downside, if we start doing it, trying to get down to this target of 69.86 3/4, obviously the liquidity grab zones will start printing lower, and we could have a lower entry in price. All right. Always trade what you see, not what you think. But that's how you marry up market profile with liquidity grab zones. All right. Let's get some ticks. Any questions, let me know.